FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Well, I'm sure you've all heard about the recent gold discovery out in California. Someone going for a walk in their yard, and lo and behold, rover finds $10 million worth of gold coins that had been buried there in the 1800s. Man, my dog only finds me rocks and bones. Where's a good dog when you need one? Here to talk about it, Barry Stuppler, Stuppler and Company. Barry, welcome back.
Thank you, Kerry. It's always a pleasure speaking with you.
Hey, so this is just an incredible story, and you know some of the players involved, so we know the story is true.
The story is true. It might have been fabricated a little bit, but for consumption, to make it more of a human interest story. But yeah, they did kick and find a can, and then when they opened it up, they thought it was paint, I think originally or whatever, but they opened it up and they realized it was gold coins. Then they went out and bought themselves a metal detector and found more cans, so all around that same general area. So yeah, it was buried in the late 1800s, and it contains mostly $20 gold pieces, some smaller coins, but many of them are rare coins. The coins were sent to PCGS for conservation. They had some problems. Obviously, you pick up rust and you pick up some dirt on the coins. They had to be removed. It was taken care of by PCGS, which is professional coin grading service in Newport Beach. They conserved the coins, encapsulated the coins, and now the coins are ready for sale. I mean, there are a lot of rare coins, and some of the rarities will probably bring in excess of $1 million, and the estimate is that the entire collection will probably bring in excess of $10 million. So it's a lovely find, and obviously, hopefully they do right with the money.
Right. Well, hey, Barry, if you found this number of coins, what would you have done?
Well, if a client came to me and with a similar story, I would probably have handled it privately. I would not have gone public with it, and kept it low key. If they wanted to set up a charitable foundation, I could have helped them with that. I don't think going public, it opens the door to a lot of problems. One of the problems is the Mint suddenly announced that they had a theft in 1900, and this could have been the coins that were taken. An uncle down the block or a neighbor down the block could open up saying that was my great-grandfather's collection, and he could file a lawsuit against them. The minute you go public, you open yourself up for a lot of possible problems. They far outweigh the publicity you're going to get. However, they're going to do that dynamite job. Amazon's going to promote this and list the coins in May, sell it on Amazon, which is the first major collection Amazon will be selling. And they're going to have a lot of publicity around it and hopefully bring in a lot of new buyers, and hopefully they'll get more than the $10 million. But I wouldn't have handled it that way. I would have done it more and kept it private.
Yeah, it's just, this comes under the law of treasure trove, which is a real interesting law. Also, it's a law of abandoned property. And basically, the finder's rights are superior to everybody's rights except the original owner. And the original owner's rights are superior, and the original owner's heirs' rights are superior to the finder's. And that's where the rub comes in, because if you can prove that you're the heir to the original owner, then your rights will defeat the finder's rights, which that's why you should keep your mouth shut when you have such outrageously good fortune.
I just wouldn't have gone public. I would have kept it. The coins could be sold very easily over a period of time, and you could maximize the return. The minute the coins were certified and the holders, the values are pretty much set. Finding the right collector or investor that will buy it should be relatively easy. Amazon will bring obviously an extra buyer out there that was maybe not available. But you're right. You've got all types of other issues that you have to face the minute you take it public, and I would have advised them not to.
Yeah, doesn't make any sense. And then, do you think there's any possibility of being able to prove that these coins were, in fact, the coins that were stolen from the U.S. Mint in San Francisco in 1900?
Well, the interesting thing, I think the latest date on the coins, I think, was either 1884, 1894, I believe, and the theft was in 1900. And there was a lot of coins minted between 94 and 1900. Plus, they don't have a breakdown of what coins were actually stolen from the mint, so it'd be difficult. I mean, a lawyer that's trying to represent the mint might have a difficult time trying to prove it, but doesn't mean they couldn't hold up the sale and maybe get some type of settlement from the current owners of these coins. But it might be difficult, and it's more likely that somebody will come out of the woodwork and say that my uncle owned that house before they did, I remember him telling me he buried coins in the backyard. I just never believed him, and then file a lawsuit and maybe make a settlement down the line for some X amount of money, presuming they can prove that their uncle owned the house before them. I mean, there's a lot of things that open the door other than just the tax liabilities and some of the other issues that are around it. I wouldn't have gone public. Like I said, I would have advised them to do it privately.
Would have made more sense to take the coins, move out of the state to a state with no income tax, like Washington State, for instance, and think of all the tax savings just not paying any state income tax.
Well, I think California would have pursued that.
Well, if they knew, and obviously there's legal issues involved here. There's a lot of ways that could have been pursued, both legally and gray area as well, to minimize the tax burden. But you got to wonder,
Oh, yeah. But I think that the gentleman that was representing them, the guy's name was Don Kagan. He's been a friend of mine for years. I think he did a dynamite job. If he went the route of publicity, making this thing public, I think he did a dynamite job. He got on every station, every local market, every national market, magazines, newspapers. I mean, from just watching the quality of what he did, I have to give him a round of applause, because if you do go public, do it like this. Do it like he did it. He got all types of media coverage. I was down in Atlanta when the news broke, and that his table was crowded with press and news reporters and local television stations in Atlanta for the whole show. It was like 2 days. He was never walked by his table where there wasn't a camera being thrown into his face, asking him stories or asking him for more details. So I give him a lot of credit for, if you go this route, do it right, and he did it right. I give him a lot of credit.
Hey, have you seen any of these coins, Barry?
Oh, sure. They were on display. A lot of them were on display. About 50 or 60 of them were on display. He had set up a display at the Atlanta show with a number of the coins, and obviously the rare coin, which was the 1866, which will bring in excess of $1 million. That's probably its finest known. To this point, if I remember right, I think the highest grade was an AU. This is like an MS-62 or Mint State coin, so it will bring probably in excess of $1 million because of the rarity of the coin. So the fact that they're conserved does hurt them a little bit, which means that they were absolutely, the dirt, the problems with the coin was removed, so they don't have the natural surface that a lot of collectors and investors like. But they were conserved by a professional that knows what they're doing. PCGS, coin grading service, professional coin grading service, knows what they're doing. They did a dynamite job, got them into the certified holders to guarantee the authenticity. So they'll sell well.
And that's the supposed revenge coin, right?
Yes.
Tell us about that one.
Well, it's just the no motto. It was done back in 1866. There was a problem with whether they put "In God We Trust" on the coins or not. So that particular coin didn't have "In God We Trust" on it. So there was a lot of battle back in the 1860s about whether we should have "In God We Trust" on coins or not. And that was one of the coins that were made. A limited amount of them were made, and then they went and put the motto on.
Right. That was the year after Lincoln was assassinated, too, so there was something involved with that as well.
Yeah, well, not necessarily directly. It was just the mindset of the people back in the 1860s. It was after Civil War. I mean, you had issues, obviously, with the Confederacy. There's a lot of information around that period of time that was happening. But, yeah, there was discussion as to whether to have in God we trust on coins or not. And that was the issue.
Interesting. So somebody's making out pretty well on this. I guess everybody's getting a payday, which is great.
Well, hopefully they'll give some money to charity. I think that they plan on doing that, to help some of the charities in that general area. Obviously, the government and the state of California and the federal government will get their share, and then the promoter will get his share. They'll probably end up with probably $3 to $4, maybe $5 million when it's all done, and hopefully a good portion of that will go to charity.
It's just a shame to see all that real sound money being converted into fiat currency, which is rapidly depreciating. You know what I mean, Barry?
Yeah, of course. I mean, that's what I covered in my book. By the way, I hope you enjoyed it. I sent you a couple copies of it.
I appreciate that. I did enjoy it. And, you and I talk about this all the time of, paper currency. It's becoming more and more worth less and less all the time. Here these people have the good fortune to find real money, and let's face it, it's enhanced by the collectability. But you and I were talking, the fact is, just on the face value, the gold content alone, it's worth 675 times more than when it was minted.
Right.
And, not to mention collectability-wise, it's worth 6,500 times more. And now they're going to be the proud owners of 3 or 4 million Federal Reserve notes, right? Digital
well, hopefully
form.
they'll do something with it. I mean, the dealer that represents them might convince them that they might want to have a certain amount of it in precious metals that maybe don't have the high degree of numismatic value that these do. He's smart. He'll advise them. I mean, he's getting a fee for it, and I trust he'll advise them. And the issues of fiat currency is something that they probably are not even concerned about. They're more concerned about how to promote it, how to get the maximum value out of it, and then a charitable contribution would be great. And then how it will change their lifestyles. Anybody that wins the lottery or whatever, that wins $200 million in a lottery, first thing they don't think about is fiat currency. They think about $200 million. What am I going to do with it? I mean, some of them take it over a period of time. Some people take it in a lump sum. When they do, obviously it makes good sense for them to put a good portion of it into precious metals, because that way it protects themselves against the devaluating currency. When you're printing trillions of dollars, yen, euro, it just makes the value go down as you compare it to gold or to real assets. And that's what I covered in my 2014 gold book. And many of your viewers have requested copies. They went to our website and looked at it online. It's on coinmag.com. That's not our website, but that's what we have it on. They want to see my booklet again. It's www.coinmag, like coinmagazine.com. They can read it if they provide their email address and mailing address. I'll be more than happy to send them a copy. It's something I'm kind of proud of. It took me 6 months to write and research and edit and print, and I'm kind of proud of it. It's probably one of the best things I've done in terms of an educational piece, and we've gotten a lot of good feedback from the community and from the press.
Yeah, and rightfully so. And hey, that leads us to the next thing. So you've got $10 million at least worth of fiat currency, Barry, that you get for this, and you wind up after taxes, just say hypothetically, $4 million after taxes, fees. What do you do with it? How much bullion do you invest in?
You want to diversify into gold and silver. You want to have possibly some platinum. I would say you're looking at maybe a 50% gold, 40% silver. You want items that are pre-33, which gives you a little bit more privacy. Some of the U.S. $20 gold pieces that don't have much of a premium, you can pick up $20 gold coins for as little as, with gold at $13.50, you can pick them up for as little as $1,600 or $1,700, which is not a big premium over for a coin that's in many cases over 100 years old. and you just put them aside, and as gold goes up, they go up at a faster pace. Or you can pick up items such as the very popular U.S. Eagle or Buffalo. These are popular bullion items, but these are what they call modern issue gold bullion items. And I would probably recommend that you stay with items that are dated prior to 1933 that give you some privacy and are subject to the same reportability issues.
Mm-hmm. So
we cover that in the booklet. And when we mail out the booklet, we put a supplement in there that kind of explains that.
Yep, I saw that. Yeah. And yeah, you want to be diversified, and you need to live as well. It sounded like these people were doing okay. They were fairly well off, and not a lot to complain about. So this just kind of will make them even happier in their golden years. I mean, they were in their mid-40s, I guess.
They got a few years left.
Mm-hmm. Yeah. They got some time, and I guess at this point, Barry, demand is still pretty vigorous in what you're selling these days, huh?
Well, yeah, the gold price has been basing right between the 1320 and 1350 area. After bottoming out the end of last year at around 1180, we rallied up nicely. The market is firm. There's excellent demand coming out of particularly out of Asia and through that area. And right now, because of the problem in the Crimea, that there's a lot of issues that are driving people to buy more gold in the Middle East as well as Europe. So we're seeing tremendous demand, a lot of new, fresh demand. Every time gold gets down to 1320, 1325 area, a lot of buying comes in. So there's some professional selling, some short-term profit taking when it gets up to around 1350. This is a good support. We're seeing excellent consolidation as at some point, probably within this month, maybe the latter part of March, we'll start to see a breakout above 1350, and then the next move up is the 1400. Silver is kind of following, showing good support around $21, some resistance at around $22. As gold breaks through 1400, then silver will probably break through 22, maybe get up to 23. We're seeing nice movement. The worst thing you want to see is gold up $200 one day and then down 50 the next. I like the way it's up $8 to $10, maybe $15, and sells off $3 or $4. But the general trend is higher. The demand is solid. We're starting to see even some of the paper gold facilities, the GTFs, the ETFs, are starting to pick up in terms of storage facility. Where last year a lot of gold came out of the ETFs, now we're seeing a lot of gold coming back into the ETFs. It's now over 800 tons on GLD, which shows you that even the speculators in the market that don't take physical are starting to look at gold differently. A lot of the hedge funds are increasing their positions in gold. So all the fundamentals are looking good. And even the mining production this year will be down. Even with gold at these levels, mining production will be down. So that means product will be down, demand is up, and that just tells you that just over a period of time we're going to see a lot higher gold prices. I look for gold to again, in my book, I look for gold to get back to about $4,000 or $5,000 an ounce within the next 2 or 3 years.
Yeah, it certainly wouldn't surprise any of us who are in this space to see that happen, because what's changed on the monetary front and the fiscal front in all these governments, even China and Russia, you see their monetary policy. They're the level-headed ones who are supposedly in control of things, and they're not.
But you can see most of these central banks continue to exchange their paper currency for gold. Most of the developing countries that have a trade surplus are putting it into precious metals. The China, the Koreas, obviously, you're starting to see a lot of gold going into countries that central bank has a trade surplus, and they don't want to keep holding it in dollars. They want to keep it a higher percentage in gold. Even if the Chinese got up to 10% of their reserves in gold, it would be a massive. We'd see gold at $5,000 virtually overnight, because it's just real money. I mean, you're talking about real value as opposed to like you said, a fiat currency that constantly gets devalued because they keep on printing. The presses are going 24/7, not just in the United States, but around the globe. And it's scary. It's scary because the value, people save their life savings in dollars. And when the buying power continues gets destroyed, it's scary for people that are in their 40s, like this couple, because by the time they get into their 60s or 70s and they start to look at retirement, the buying power of that $4 million is going to be less than a third of what it is today or less.
Yeah, it really is frightening. And then that's if things just keep going the way they're going. If there's some event or some black swan or just some kind of catalytic force that occurs, man, who the heck knows what's going to happen then, Barry?
One of the speculations is that the Chinese would like to make the RMB replace the dollar as the world's reserve currency and back a portion of it by gold. They're buying storage facilities around the globe to keep their gold. I cover that in my book in terms of it's scary in terms of they're building up their gold reserves at an extraordinary pace. And if they're able, if we wake up some morning and we find out that the U.S. dollar is no longer the world's reserve currency, then that's the catastrophic event you're talking about. That's the kind of all of a sudden now gold. You wake up and gold's $5,000 an ounce. There should be no reason why. The dollar gets replaced. Governments around the world hold the dollar because it's the reserve currency. If it's replaced by the Chinese currency, then they don't need to hold it anymore. And it changes the whole scenario, and that's a possibility. I cover that in great detail in my book because that to me is the scenario that's going to change things dramatically.
How likely do you think that is, Barry?
I would say if you're talking the next 3 to 5 years, probably 50 or 60%. They are working towards that. They are building. They're doing every step. If you thought it out how to do it, they're taking every step in the book.
Yeah.
They're building up their gold reserve. Their currency is strong. Their economy is strong. They're opening up. They're purchasing depositories around the world to hold gold. They're building depositories around the world to hold gold. And the minute their currency is backed, even a good portion, 10% by gold, that's a lot more than you get from the U.S. dollar or the euro or the yen. And their economies is growing at a tremendous pace. It's a scary scenario, but I think it's got a lot of possibilities, and I cover a lot of it quotes in my book in regard to this issue. And this is right now. The question is whether they're going to try. I believe so. Whether they'll be successful, I don't know.
Yeah, well, Russia's had a lot of gold for a lot of years, but they never tried it. Putin's been rattling the cage over the Ukraine, dumping U.S. assets, and China hasn't appeared to want to go along with it. I don't think the Chinese particularly trust the Russians. When you get down to it, they're kind of uneasy allies because they're allied against the United States, but the day certainly could come where China just feels they don't need the U.S. and the dollar any longer. And let's face it, the U.S. has abused the trust of the world in the way that it's behaved in just creating unlimited dollars and just kind of stealing from the world.
When you have a $17 trillion deficit, budget deficit, debt, it's quickly going to go to 20 probably in the next 2 or 3 years. And at the same time, the Chinese are holding a lot of our debt. The demand, an orchestrated, I want to be careful on how I structure this. It could be orchestrated very well. That would replace the dollar with the RMB as the world's reserve currency. It could be handled, and I'm not saying they don't know that way. You can see they're quickly working towards it, and it's scary. It's a scary scenario.
Yeah, well, I think the only thing that's really saved the U.S. from this collapse, Barry, over the past 3-4 years is really the energy boom. I think without it, we really would have been sunk a long time before.
Low interest rates also.
Yeah.
Because obviously the cost of the debt is substantially lower now than it was 5 years ago.
Oh, for sure.
So that slows the pace down, and trades and the surplus, the deficit is going to be under $1 trillion this year because of the energy issue.
Yep.
Point about the fact that we're getting self-sufficient. That's helpful. All it does is slow the ultimate issue.
Well,
slows it down.
If there's not another 5 million barrels a day coming out of the ground in this country in another 5 years, I think we're sunk. And I think you're absolutely right in what you're saying. It's so obvious, and yet, Barry, nobody really wants to face it and deal with it. But the Chinese do have their own assorted set of problems because they themselves have been printing way more than the U.S. and the EU over the past 5 years since 2008.
But they're giving concessions to the public. They're encouraging the public to own gold, where the Indians are slapping taxes on it. The Indian, I don't mean American Indians, in India are slapping import duties, and there's a big amount of smuggling going on, where they're trying to discourage people from buying gold. The Chinese are doing the exact opposite. They want their citizens to own gold, to hold gold. They've got every type of program out there to encourage them to hold gold, and it's a different mindset. And the more gold they hold, the more they're protected. Even if their currency starts to inflate at some 3 to 5% or whatever, it's still that their gold holding is going to far offset that. And we're continuing to run budget deficits, and this is an election year. It's going to be beautiful. I mean, in terms of the politicians are not going to put any taxes on us or whatever. It's not during an election year. Next year might be different, but this year they're going to spend. They want the economy booming by November, and they're going to do what they need to do to increase the economy going at a good scale. So by November, everything looks good, and the incumbents get reelected. So you're looking at an interesting scenario at this time. You've got a lot of facets around everything from the Crimea, which is encouraging people to hold precious metals or hold safe haven assets, is the way referred to it, to what's happening in China, to our budget deficits, to what's happening in Europe in terms of their governments, in terms of stimulating the economy, not being concerned about inflation. When inflation comes, it's going to come quickly, and you're going to see it. You're going to see it in prices, and not official terms, but in real terms.
I think you're feeling it now. You've been to a restaurant lately, Barry?
Yeah, I see.
I mean, restaurants, I think their prices have gone up 30 or 40% in the past 3 or 4 months. Am I crazy?
A lot of the agricultural goods and a lot of the raw materials are starting to go up this year. And
the herds.
That drives up. I mean, they were talking on the news the other day about guacamole and avocado prices starting to go up. So you're starting to see that's the beginning. That's the beginning. As we start to see it in the real numbers, it's going to encourage. Hopefully, it's going to encourage people to look for an inflation hedge. And now we're talking gold and silver. So I am speculating that my business with our clients will probably go up at least 30 to 40% this year and last year was a record year. So we have a lot of clients that are just believers. I mean, I distributed over 3,000 copies of a book to our clients because that they just wanted to get an update on what's happening and best way to protect themselves. And I can't see any reason why they shouldn't own a good percentage of their assets in gold and silver, because it's the only viable alternative to holding paper money.
Yeah, I can't see any other alternative myself, Barry. So on that note, where do we find you again?
Well, you can go to mintstategold.com. It's an e-commerce site, and it lists a lot of products plus the current price of gold and silver and all the various products that we handle. And if you want to read the gold booklet, it's online at coinmag.com, like coinmagazine.com. If you want a hard copy of it, all you do is send me your mailing address, and we'll be more than happy to send you out a hard copy of the book. We've got maybe another 1,000 or so left. So I think your listeners as well as the general public should just keep a certain portion of their assets in precious metals. It's just safe. It's your life insurance policy against financial collapse and financial turmoil.
You know, on Financial Survival Network, that's what we're all about, is seeing you have the insurance policy to get you through these times, because the government certainly isn't going to do it. So you better get wise now before it's too late. So, of course, go over to financialsurvivalnetwork.com. You're listening to this interview. Click the link. You'll get to Barry's site, and you can order the publication, hard copy, or get it online. Either way, it's definitely must reading, because I think you agree, Barry, these are dangerous times we're living in.
Yes, they are.
So just go there. Don't forget, sign up for our free newsletter. Barry, have you noticed that you can't find a decent new bill these days, that all the bills are crummy? They're not replacing the bills anymore. Why do you think that is?
I think they're replacing bills, but they can't keep up with the demand for currency right now.
There's no new 2013 bills. You can't find a bill with Jack Liu's signature on it. We're writing about that in the next newsletter. You want to take a look at it.
Yeah,
no new series of printed money, printed currency out there. Think about that. It's not the way it used to work. It's all crummy money. And what that means, I don't know. If you have any ideas, please write me, KHL@kerrylutz.com, because I'm trying to figure it out, and I've got some interesting stories about it. Barry, thank you so much.
My pleasure.